Have you ever wondered what the stock market is? Why does it go up? Are you sure that it's going to go up in the future? I think it's going to go to zero. Stay tuned and I'll teach you what the stock market is, why it goes up over time. Hey, it's Andrew with the Above Average Investor podcast. Today we're talking about the stock market. What is the stock market? Why does it go up? Why do people invest in it? Is it really an investment? Or are you just throwing money down the toilet? So let's jump right into it. First up, the stock market just means a big group of companies. And so these are companies you've heard of: 3M, Google, Amazon, Facebook, Delta Airlines, Visa, Caterpillar, John Deere, ExxonMobil. Wild assortment of companies across any and all industries. That's the stock market. It's just a group of companies, basically. So you could say your neighborhood, all of the employers that employ everyone in your neighborhood is a small section of the stock market. So if you go and interview your entire neighborhood, you're going to get a list of a dozen, 2 dozen, 3 dozen companies that employ all of your neighborhood across a assortment of industries, big companies, small companies. And so if you had to bet, is your neighborhood on average going to stay employed? Are their businesses going to thrive? Are they on average, are most people going to keep their houses, keep buying groceries, keep buying cars every few years? Yeah, of course. No one would argue against that in your neighborhood. But when you think of it on a much bigger scale, is everyone in the country, is everyone in the state, is everyone in your city gonna most likely stay employed over the long term? Are all of those businesses gonna stay in business over time? All the Dairy Queens, all the gas stations, all the grocery stores, all the plumbing companies, all the Facebooks, all the wedding photographers, all the contractors, like, we all acknowledge those businesses are going to ebb and flow. They're going to go up and down throughout the times. But none of us argue that all plumbing, electrical, carpenters, car mechanics, car manufacturers are all going out of business till eternity. That doesn't make sense. You'd seem like you're a little loony if you're going around saying that. But that's really the same thing as saying the stock market's going to go to zero. Are all of these companies as a whole going to just vaporize and we're going to go into a zombie apocalypse? Well, I hope not. And if we do, I think we have bigger problems than the value of your 401k or my 401k. Like, who cares? Just try to find soup cans at that point, I guess. So I've already covered what is the stock market. It's a big group of companies. So who's included? It's all those big companies. It's the Allstates, American Express, Bank of America, eBay. These are all examples of companies within the S&P 500. This is a common term for the stock market. It's the NASDAQ, the S&P, which is the S&P 500. There's other examples, which is just bigger and smaller list of employers or companies. And so the reason that all these companies are most likely, as a whole, on average, going to exist forever is you and me buy goods and services. We buy groceries. We will forever buy ice cream cones at Dairy Queen in the summer. We'll always buy cars every few years. We'll always hire a plumber to replace our plumbing. Because are you going to do that? Exactly. And so we're always going to keep buying laptops, the iPhones, your new crayons for your kids in school. Like, our goods and services purchasing skills are not going away. We're, as much as many of us want to go live in the woods off the land, most people don't forever. And so it's just a fact of life that we're in a consumerist society. We're going to keep buying goods and services, and we're not going to just give up all of those things. And so those companies are going to still be taking orders from all of us, the customers. And then when you so that's one side of the coin. The other side of the coin is that those companies are full of employees. Those employees are very self-interested in getting an income, so they can buy goods and services. So all those employees are self-interested to keep their jobs and their careers. Maybe they want to bounce jobs or bounce companies, but they all don't want to go and live off the land forever. So they're going to keep showing up to work. They're going to keep trying to do a good job. They're going to keep trying to improve their skills. And that, as a whole, on average, is going to make the company stay in business. It's going to provide those goods and services. That mechanic is going to keep working on your car. That plumber is going to keep fixing your toilet so you don't have to. So then you can hire him or her back again. Apple is going to continue making iPhones because you're going to stand in a line at 4 a.m. to go get the latest iPhone, whether you need it or not, and no matter what the cost is. So that's just the society we live in. And these employees are all self-interested to keep their jobs. Same with the middle managers, same with the CEOs. And so the businesses are going to remain in business because all those people have their own livelihood literally on the line, that if they go out of business, it impacts them. So they're going to stay in business, which means they're going to figure out a way legally and morally to stay in business and provide good value for their customers long term, so they can stay in business as long as possible. And of course, we know that some businesses, they go through those cycles. So yeah, but that S&P 500, those 500 companies are going to stay in business. And that list of 500 is self-cleansing, which is really nice. There's an excellent book called The Simple Path to Wealth by J.L. Collins that explains this. So once you're a 501st biggest company, you're off the list. You are officially a loser. And now the next up-and-comer is in that list of 500 in the S&P 500. So you're betting on winners, and some of them are going to go to the moon. Some of them are going to the toilet, but most of them are going to just do pretty well. And that's that 10% per year returns. So if you have 1,000 times 10% is 100, 10,000 times 10% is 1,000, a million times 10% is $100,000 a year. So your income rises, and that is literally no relation to how much you show up to work. So that's one of the beauties of compound interest. So that's over the long term what the stock market is. That's why I think it's going to go up over time forever. So are there going to be wars, pandemics, unforeseen examples of things that are going to take the stock market down temporarily? Are the airlines going to crash in COVID and then come back? Yeah, of course. Things are going to happen, and almost all of those big events are completely unpredictable, like COVID, like the 2008 Great Financial Crisis, like the dot-com tech bubble, like the Black Monday in 1987. There's these big unforeseen crashes that just, it really does take the stock market down to its knees. It cuts it by 20, 30, 40%. But then every single time for hundreds of years, people keep showing up to work wanting to get paid. And people keep showing up to the store expecting goods and services. So the companies, on average, stay in business. And the economy, on average, goes up. So that's Stock Market 101. If you found this video helpful, please like and subscribe our channel. We're going to be sharing weekly videos on all things investing and intentional living. If you have any questions or comments on the stock market, drop a comment below and I'll respond and try to help you out. Thanks for attending all.